I remember the first time that I sold a put option. I was terrified that I'd be assigned the option and I'd lose big time. But then I discovered the secret to winning 95% of my trades. Let me show you how that works. Trading options is all about probabilities, the odds that a stock will or won't move to a certain price within a certain time frame. Here you see the daily chart of Pepsi. This chart goes right up to the day that I sold a cash secured put option against Pepsi. Notice what had recently happened to the stock price of Pepsi. It was down right around 25% over the past several months. In just a minute, I'm going to share with you the real trade I did in Pepsi. And at the end of this video, I'm going to show you how the trade turned out. But first, let me tell you why I sold a cash secured put option against Pepsi on this date. First, as option traders, we get paid more when volatility is a little bit higher. With Pepsi having declined recently about 25%, volatility was higher in the stock, and therefore options were selling for a little more than they normally would. But there was something else that triggered me to sell this put option against Pepsi. I've got some notes I want to share with you right in here. Notice that the day that we did this trade, which was April 30th, the price to earnings of Pepsi was around 16.8. However, its average price to earnings was about 21. So from a fundamental standpoint, Pepsi was trading at a pretty good discount. With Pepsi trading for around $135 per share, I decided to play it a little bit safer and sell a put option just out of the money. So as you see here, the white line, I sold the 125 cash secure put option. And the expiration date was 51 days into the future. So I've sold a put option that's about 7% out of the money. I've sold it in a stock that I really like and one that I believe is currently undervalued by a pretty good bit. I've then given myself 51 days to win on this trade. Although the daily chart wasn't looking great from a technical standpoint, notice what the weekly chart looked like. It too was in a decline, making lower highs and lower lows. However, notice what had been happening recently. Over the past 3 months, Pepsi had basically been trading sideways. That made me think that possibly its decline might be over. But there's something else from a technical standpoint that I really liked. Now remember, we're looking at the weekly chart here. And if we go all the way back here to the left side of the chart, notice that over 4 years before we did this trade, that this area where I sold my put option at, that $125 area, it had previously served as nice support for Pepsi. And it didn't do it just once. Notice it did it twice, 3 times, and then over this period here, right after the COVID crash, it found nice support at that 125 price point. Because of that strong support from several years ago, I felt comfortable selling this put option, even though on the daily chart and the weekly chart, it was still in a decline. That support is why I decided to sell it out of the money, even though it had been finding support around 140 over the previous couple months. So how many put options did I sell against this wonderful company that I believe was fundamentally undervalued? Well, my personal rule is that in my larger account, I don't want any one position size to be over 5% of the capital I have set aside for that portfolio. But I prefer my initial position size to be only 2 to 3% of my overall portfolio. That leaves me an additional 2 or 3% to adjust or repair the position if it goes against me. Because of that, I generally like my initial position sizes to be around $30,000. And if the position goes against me, I allow myself to have about $50,000 at risk in any one position. So how would I manage this position if it went against me? Well, step one would be to try and roll that put option down as I rolled it out in time. But if I just couldn't get that done for a reasonable price, then I would allow the stock to be assigned to me. I begin to collect those dividends and I turn it into a covered call. But remember, I have allowed myself an additional 2 to 3% to help repair this position if it went against me. So I definitely have some options here or some tools I can use to repair it. Now, what about emotional control? That's something you don't hear a whole lot about here on YouTube or different trading platforms, but emotional control is very important. And that's why I like to stack the odds in my favor. I like to not only trade put options in companies I believe technically are interesting, but also ones that are fundamentally, preferably undervalued, or at least fairly valued. I don't want to trade some company that I believe is overvalued, because when you do that, your emotions can really get the best of you. It can cause you to make bad business decisions. And this is a business, so we want to make smart business decisions. Everything I share with you so far is based on playing the odds. And what we've done so far is put those odds in our favor. Based on everything I've shared with you up until this point, this is the put option that I sold. On April 30th, I sold the June 20th 125 put option and I got $1.51 per share. Notice that option expired in just a little less than 2 months in the future. Remember, it had 51 days to expiration. Let me just ask you, what are your thoughts? Was this a good trade? Now go ahead and pause the video and write your answer down in the description below. Do you think I should have sold a higher put option strike price or a lower one? Do you think I should have sold a nearer days to expiration or a farther out days to expiration? Or do you not like selling this put option at all? Let me know down in the comment section below. So here's where we're at. Pepsi has just declined 25% over the past several months. In just the past couple months, it was down over 15%. Maybe you found yourself thinking that same question in a cash secured put option that you've sold. The thing about fear, the thing about doubt, is that it's usually based on the fact that you don't understand your risk, or you haven't put the odds of winning in your favor. I had zero doubt and zero fear in this position. And the reason is that I understood the risk and I believed I had put the odds of winning this trade in my favor. Here's a chart of what that risk looked like. Let me explain this diagram here to you. On the right side, we have your profit and loss. Then on this horizontal axis, we have the price of the underlying stock, in this case, Pepsi. Remember, we sold the 125 put option that expires in 51 days. Expired on June 20th. Notice at the time we did this trade, Delta was at 19.5. Notice here under the column theta, we have theta in our favor. This position should gain about $3.52 per share if everything else remains the same. So what does our possible profit and loss look like? This solid green line is the P&L at expiration, or 51 days into the future. This light green line is what the P&L would be as of today at various prices. So notice it was trading for about $135 per share on the day we did this trade. So our P&L was zero, or actually it was -1 because we paid $1 in commissions. Notice if Pepsi came way down in price, we could be showing a pretty good loss at expiration. However, I was okay with that because I believed I was trading in a fundamentally undervalued company already. So if it came down, that only meant it'd be even more fundamentally undervalued. But on top of that, I believed I had the technicals in my favor. Now, something else I want to point out to you here in this software. Remember, Pepsi's trading for about $135 per share. Now, if we had sold the 130 put, notice we could have got a lot more premium. We would have got $2.70 per share. So almost twice the premium of the $1.50 we received. However, that was a little too close for me considering Pepsi's recent sharp declines. And if you're thinking, well, I want to play it safer, we could have done that also. For example, I know some of you like to use Delta, and some people say that Delta is the odds that the trade will go in your favor or against you at that moment in time. Remember, Delta changes every second of every day. That's why I don't tend to like to use Delta that much, but I know some of you do, so let's just play that scenario. What if we want to have a 95% chance of winning this trade? Well, if that's the case, we get on here to the 110 strike price. Now, we don't get 28 cents per share, but notice it says the odds of us winning that trade are about 96%. Well, there's about a 4% chance this option will be in the money at expiration. So notice the farther out of the money you get, the higher the likelihood it is that you'll win the trade. However, your initial reward is potentially less. So you get smaller option premiums, but your odds of winning go way up. Before I show you how the trade turned out, let me ask you, how do you decide what strike price you're going to sell your put options at? Do you base it on Delta? Do you base it on technicals? I'd like to know what you use to pick the strike price of the put options you sell. So please let me know down in the comment section below. Now I fast forward the chart to the day we exit this position. Notice that during the approximate month and a half that we're in this trade, Pepsi did drift lower, but not much. It drifted down about 3.4% from the day I did this trade. So overall, continue to find nice support just above the put option strike price that we sold. So on June 13th, I closed this position out for over a 90% win. We bought to close the June 20th 125 put option for 10 cents per share. There's 3 points I want to make sure you get out of this video. These 3 points will help you consistently put cash into your pocket every month by selling put options. When you sell put options, you're not trying to guess where the stock will go. You're just simply trying to guess where the stock is least likely to go. That's a lot easier way to win. Number 2, I encourage you when you're selling put options, sell them in high quality stocks. And if possible, sell them in stocks that you believe are fundamentally undervalued. At worst, sell them in stocks that are fairly valued. The third tip is to use both the things I just mentioned. Combine fundamental analysis with technical analysis to put the odds of you winning your trades drastically in your favor. In other words, make solid business decisions, not gut decisions. If you'd like to get an alert whenever I buy stock or sell options, check out the benefits of becoming a Patreon down at the link in the description below. Dividend Collector, a YouTube video, asked a really good question. It's probably one you thought about also. They asked, when is the right time to roll a covered call? Check out the video at the link above and the description below entitled, Don't Lose Your Stocks, How to Roll Deep in the Money Covered Calls. Until next time, happy investing, and we'll see you again soon.